Howdy. Swings. PPI, Producer Price Index, and CPI, Consumer Price Index, indicate a positive outlook for inflation, which has helped the market recover. The market has moved higher, nearing the S&P 5600 mark, as predicted in last week's forecast. Even with the lower inflation rate, the market's recovery has been somewhat larger and quicker than anticipated. How long will this rally last? Or is a market downturn on the horizon? Let's take a look at Fullhapce's weekly swing market forecast to get some answers. Let's check the weekly market index movements. The market showed some recovery. Nasdaq and gold prices increased by around 5%. The VIX index, which measures market volatility, decreased by over 26%. S&P 500, 5,554.26, 3.93% up. Dow Jones, 40,659.83, 2.94% up. Nasdaq, 17,631.72, 5.29% up. Russell 2000, 2,149.7, 2.86% up. Gold future, 2,546.0, 4.68% up. VIX index, 15.02, minus 26.26% down. Here is the weekly sector performance. All sectors showed positive performance. Semiconductors, tech, retail, and consumer discretionary sectors performed particularly well. Here are the reasons. Markets had a positive week due to lower than expected inflation. Economic growth looks stable. Corporate earnings reports at the end of July were generally strong. The Federal Reserve made some moderate comments. The stock market seems to have regained some confidence. Here are things to consider. Recent growth data, including weekly jobless claims and retail sales, have reduced concerns about a U.S. recession. U.S. inflation data for July suggested that price growth is slowing. A survey from the New York Fed showed a significant drop in three-year inflation expectations. A Bloomberg article reported that landlords are offering more concessions to renters as the supply of apartments increases. Federal Reserve officials are hinting at a possible interest rate cut at their upcoming September meeting. Consumer-related news was generally positive, with strong retail sales in China, the UK, and the US and good earnings reports from companies like Walmart. Sales and earnings for some retail companies were strong, showing that consumer spending remains robust. Mortgage refinancing activity is on the rise due to the recent drop in interest rates. Foxconn reported strong demand for AI servers and expects significant revenue growth. The Cass Freight Index's shipments component rose in July, showing improvement after several months of decline. Weekly market forecast for swings is as follows. The upside potential of the monthly market is strong, but monthly volatility has reached or is close to critical point. It is important for investors to realize that a major bear market could be coming in several months. However, the weekly market still has strong upside potential, and this is likely to continue for some time. Weekly volatility has also reached a critical point, and we will soon see if the weekly rally will continue or reverse. Next week, we expect the market to continue to move higher, but there is a possibility of a bear trap midweek. We expect the S&P to reach the next resistance level at 5650 in the coming weeks. The rally could face some challenges next week, but given the strong support on bearish tests, the uptrend could continue for some time. Here are some other helpful insights. With the economy showing signs of a soft landing, the near-term outlook for stocks looks positive. Current data suggests a slowdown but not a collapse, and lower inflation could prompt the Federal Reserve to cut interest rates. The S&P 500's projected 2025 price-to-earnings ratio is expensive at 20 to 21 times earnings. The Federal Reserve is unlikely to cut rates by 50 basis points at its September 18th meeting, with the market favoring a smaller 25 basis point cut with steady growth. Geopolitical issues such as the Gaza ceasefire talks are unlikely to pose a major threat to the stock market. Here is devil's advocate. The opposing scenario is that the market could turn bearish and then fall sharply, sending the S&P down to the 5,150 level. In this case, a bullish trader might want to wait for the market to reach this low and consider buying at the lower price. If this happens, you may find it helpful to check the information in the Fullhapce daily market forecast for guidance. The rationale of this scenario is as follows. Some of Thursday's U.S. CPI details, especially the core services number, were a bit hawkish. Investors are overly optimistic about the Fed's quantitative easing, which could soon lead to disappointment. Other data was less encouraging, including the Philadelphia Fed survey, NAB housing index, import and export prices, and industrial production. China's July economic data showed that industrial production, real estate investment, and retail sales slumped, and the unemployment rate rose. Iron ore prices hit multi-year lows. Japan's second quarter GDP may prompt the Bank of Japan to tighten more aggressively. Trump has hinted at additional tariffs, and Harris may push for tax increases on corporations and the wealthy. Geopolitical risks remain high. Some tech and retail companies are starting to show signs of earnings declines that warrant attention. The opposite scenario makes sense, but since the market's worries are currently focused on the Fed's agenda and a recession, we think a crash is unlikely unless something decisive happens. However, traders should be mindful of the possibility of the opposite scenario. Here is the conclusion. While a major bear market is likely to come in the several months, the current weekly market has strong upside potential and looks likely to continue to improve. As a result, the market has recovered quite quickly recently, and we believe the rally has already begun. There may be some bear traps next week, but next week is likely to close higher, and the overall trend is for the market to go higher for quite some time to come. Weekly volatility has increased, but this could end up being a good thing for the market. Traders may want to stay positive and consider some profit-taking or risk aversion around S&P 5650. Viewers may be wise to consider both out main forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.